Good afternoon. My name is Dorothy Huddleston, and welcome to MMSDC PPP Round 2 briefing, what minority business owners need to know about the PPP2 stimulus bill. Today's expert panelists are Brian Kelly, President, Small Business Association of Michigan, Jerry Grady, partner of UHY, and Kenneth Kelly, Chairman and CEO of the First Independence Bank. And our moderator is Michelle Sori Robinson, President and CEO of MMSDC and operator for the Detroit MBDA Business Center. If you have any questions, please add in the QA box down below. We will not be monitoring any chats. Please check your email during today's session for a survey regarding this event. We value your feedback. And today's event is being recorded and will be available soon to view at www.minoritysupplier.org. And with that, help me welcome Michelle Sori Robinson. Good afternoon, Michelle.
Good afternoon, Dorothy. Thank you so much for that warm welcome to our audience. I'm excited to have all of you here with us today. It seems like a year ago, none of us had heard of COVID-19, and we're off to what we were all excited would be an exciting 2020. Well, the year certainly did bring many twists and turns, and I believe it brought many silver linings. When I look back at the work that has been done to ensure small businesses were still able to remain viable so that our community economic fabric throughout the country could remain strong, I am proud of the work that so many organizations have done. I'm extremely proud of our staff today, though, as we get ready to talk about really the Economic Aid Act and this new legislation that came out December 27th, while most people were enjoying some type of holiday relaxation and respite after a really tough year. But our team immediately began to work and to identify ways to bring you the best information that we could on this important bill and how it would be able to help you sustain your business. As we were doing that, we began to think about our all-star panel and the right panelists. And I am proud to say that all of our first choices said yes. And we appreciate them being here. They each bring a different element to this conversation, but a wealth of knowledge, experience, and quite frankly, passion for small businesses, for minority businesses, for making sure our nation works well for everyone. So I will introduce each of them in a moment, but I want to start by really talking to you about these sessions and what they are about. I'm proud of our organization. I'm proud of the staff, not only because giving up their holiday time to make sure we were able to bring this content to you, not only in webinar form, but many of you who are clients are receiving the calculators that we've created to help you be able to calculate your readiness and whether or not you qualify for these loans, but really looking at everything that we do. We created something called the Design Series a few years ago. We model it after TED Talks, the famous TED Talks, but design for us stands for a few things: diversity, entrepreneurship, innovation, supply chain, global, and networking. Anything related to these topics, we as a council want to make sure we bring you the best, the most informative voices. And that's really what today is about. I'm excited about this lineup. Last year, I recall that when President Trump signed the legislation for the CARES Act on a Friday, literally by Monday, we had Brian Kelly. And at that time, most of us were working virtually, and Brian was so gracious that he literally sat in his car to be able to talk to you about that and to broadcast that information so that immediately you could start to figure out your eligibility and to understand what those hundreds of pages in that act really meant for you and your business. We then followed that webinar up with other webinars, including accountants and bankers and lawyers, to really help you navigate the process, business experts to help you figure out, even after you were able to secure a PPP loan and apply for forgiveness later, how do you continue to readjust and modify your business so that you meet the demands? So this series today kicks off 2021, and I am excited to focus on how we can help you bring these valuable resources to you. And as I said, we could not have asked for a better lineup. I'm going to start by simply introducing each of them. I'll start with Brian Kelly. Brian is the current president of the Small Business Association of Michigan, known as SBAM. In his role, Brian is able to put his passion for Michigan small businesses front and center. You recognize his name because Brian had the honor of serving as Michigan's 63rd Lieutenant Governor from 2011 to 2018. During that time, he played an integral role in Michigan's comeback. In fact, he is often referenced as redefining the role of lieutenant governor, taking on issues that were critical and important to the success of our state. Kelly was the driving force behind two historic tax reforms that were the catalyst for significant private sector job growth in Michigan. During his tenure, more than 555,000 jobs were created, and Michigan saw the lowest unemployment rate in 18 years. As Michigan's lieutenant governor, he also spearheaded regulatory reform, infrastructure improvement, and employee engagement efforts. Prior to serving as our lieutenant governor, Kelly served 2 terms in the Michigan House of Representatives, 2 terms as an Ionia County Commissioner, and worked for over a decade in community banking. He holds degrees from Michigan State, Grand Valley State University, and the John F. Kennedy School of Government at Harvard University. So join me in welcoming Brian Kelly. Our next panelist is none other than Jerry Grady. Jerry is a senior partner with UHY, and he has acquired a wealth of knowledge throughout his nearly 35 years in public accounting. Jerry manages a team of professionals devoted to providing financial, tax, and business consulting services. He helps companies identify tax savings, improve operating efficiencies, and increase their profits, as well as assist his clients with corporate growth and business management strategies. In fact, he serves many of our minority business enterprises, including the council. Jerry implemented the Profit Sense tool used to analyze a company's financial ratios against its peers to assist in determining a company's strengths and weaknesses, as well as other technology tools utilized by the attest teams to improve efficiency and quality of all attest services. Jerry is a frequent presenter at financial conferences, and we are excited to have him join us today. Join me in welcoming Jerry Grady. And finally, last but not least, is Kenneth Kelly. Kenneth is the chairman and CEO of the First Independence Bank, a minority depository institution based right in Detroit, Michigan. He is a respected leader in the banking community and has served as a board of director of the American Bankers Association, that is the voice for the nation's $20.3 trillion banking industry, which is comprised of small, regional, and large banks that together employ more than 2 million people. They safeguard $15.8 trillion in deposits and extend nearly $11 trillion in loans. Kenneth served as the chair of the National Bankers Association from 2018 to 2020. And from 2018 to 2020, he also served on the Federal Reserve Bank's 7th District National Bankers Association Depository Institutions Advisory Council. Join me in welcoming Kenneth. Kenneth is a driver of solutions to support minority businesses with corporate entities, regulators, and executive branch administrators regarding economic equality. So this is an exciting panel. We will kick off today with Brian Kelly, really presenting from a policy perspective, the overview of the Economic Aid Act and its portions really dedicated to Paycheck Protection Program. After Brian speaks, we will come back and have a roundtable discussion with the panel. We invite you to ask your questions by using the Q&A button. We will do our best to get to each of those questions throughout the session. But Brian, if you'd like to kick it off.
All right. Thanks, Michelle, very much for the invitation to be back. And I have upgraded. I'm no longer operating out of my car. I'm now in the basement of my house. Been remote. Small Business Association of Michigan has been operating remotely since May, like many of the people I'm sure watching this. Pretty exciting time, though. The Paycheck Protection Program round 2 is coming just in time for a whole host of industries that are really still struggling and severely restricted due to the pandemic. So what I wanted to do is to first give an overview of the pandemic, or of the Paycheck Protection Program and some other key components that matter most to business. So as you know, the Congress passed, the president signed, and then the SBA issued rules with respect to the Paycheck Protection Program expansion. Those rules came out last week, and there's been there's kind of a staged rollout of the availability of the Paycheck Protection Program loans. So the Head Start group is already underway right now. There's going to be another one, I think, actually tomorrow. Community banks can get a bit of a head start on everybody else that is remaining. And then on the 19th is when I expect it'll be open up to all banks, all credit unions who participate with the SBA, and all borrowers. Just a little bit of commentary on loan versus forgiveness and grant, and how useful is an SBA loan in this case. I think as long as you spend the money according to the rules, you can have a high degree of confidence that it will be forgiven. In other words, turned into a grant, essentially. Might beg the question, why not just grant the money in the first place and save all the trouble? Well, federal law doesn't allow for the Small Business Association or Small Business Administration, the U.S. Small Business Administration, to grant money. It's not part of their mission. They can loan money, and then they can forgive it after they loaned it, but they can't grant it. So it's kind of a different, it's kind of an end run around the way they normally operate to use that as a delivery system for relief dollars at this time. So but the regulations authorize banks to start lending money basically immediately, or as soon as the program portals open, and that'll be through the end of this first quarter. So there are two things, though, big broad things that it does. First is it opens it back up for those who did not receive round one. In other words, if you never received a Paycheck Protection Program loan before, you can get one under essentially the same terms as round one. If you received a Paycheck Protection Program loan already, you can get a second round, but there are more qualifications for that. So let's get into the next slide here, what those qualifications are for round two. The first thing I want to say is that that Congress has, I think, made some good efforts here to narrow and target this round two more towards smaller businesses. You might remember there was some controversy after the first round that a lot of big companies were first in line, that they took a lot of the money, and it ran out pretty quick. In this case, they've limited the amount to $2 million. Before, it was limited to $10 million. So the max amount that you can get is $2 million. The employee size has been lowered to 300. Before, it was 500. So 300 employees or fewer. But the biggest qualifier change is that you have to have shown a loss in revenue in at least one quarter in 2020 compared to 2019. So you can look at quarter number one, number two, number three, or number four, any of the quarters in 2020, compare it to the corresponding quarter of 2019. If you experienced a 25% or more decline in your sales, then you qualify. You can also show, if you don't have quarterly financials, but you show that the entire year was 25% less in sales than 2019. So 2020 was 25% as a total of the entire year compared to 2019. That also, according to the rules, allows you to qualify. So those are the qualifier differences. You have to be smaller than before. 300 employees, you can get no more than $2 million and show a loss of 25% or more in at least one of the quarters of 2020 compared to 2019. So in terms of loan size, how much can you get that ends up being converted into a forgivable loan. For many businesses, it's the same as before, 2.5 times the monthly payroll of the business. So there's the calculation that you used last time, you can use that again. So if you got a round one and now you're going in for round two, you can use your average monthly payroll calculation from before. This allows you to use that same average monthly payroll. You can also update it if that benefits you. You can use your 2020 average monthly payroll if you would like, if that benefits you, but otherwise you can still use your 2019. For a lot of businesses, 2020 was down on payroll. So if they had to use the 2020 numbers, it would mean they'd get less, and they didn't want to require businesses to get less. And that might really need the help. So you can borrow your payroll calculations from before and apply them here. And if you are in the accommodation or food business, you can get 3.5 times payroll. So that's a big difference, a big accommodation made for those lines of businesses that have been in most cases, they have been the most impacted by the pandemic, the most restricted by government in terms of their operations, so they can get more. The Paycheck Protection Program forgiveness is, the big qualifier on that is at least 60% of the loan has to be spent on payroll costs. So that provides more flexibility than in the very beginning. Remember, the first Paycheck Protection Program loans had a narrow window you had to spend the money in, and they had a higher percentage that had to be spent toward payroll. In this case, you have more leeway on what you can spend the money on, but 60%, if you want it to be forgiven, 60%, at least that amount has to be paid or spent on payroll costs. But again, you have a longer window to spend the money and still be eligible for forgiveness. One really big improvement from this, and from the CARES Act to this stimulus bill that passed in December, is that it makes explicit that you get full deductibility for the expenses that you spent the Paycheck Protection Program proceeds on. So the IRS previously had said, hey, you're not going to get charged for income for forgiven loans, therefore you can't deduct the expenses. There are a lot of us who work in business advocacy. Wait, that is not what the CARES Act said. And so we asked for a clarification from Congress, which was granted. And IRS has already reversed that previous rule to make clear that that what you spend these proceeds on are in fact deductible for round one and round two of the Paycheck Protection Program proceeds. And also forgiveness is streamlined, but if your Paycheck Protection Program loan is less than $150,000, it's almost automatic. I mean, it's basically like an attestation that you did everything right, and you get it forgiven. For those of you out there, I won't get too much into detail on this, but if you received an EDI or EIDL, an economic injury disaster loan advance, a $10,000 grant, sometimes they're a little less than $10,000. Originally, those were being subtracted from your Paycheck Protection Program forgiveness. That got corrected in this as well. So you can go back to your bank and ask them to reapply for full forgiveness, even if you got an EIDL loan advance. Next slide. Advance there. So the Paycheck Protection for forgiveness purposes, or for your calculations, yeah, we talked a little bit about this, but you're gonna use 2019 or 2020 for calculating your loan amount, your payroll expenses. Again, you can just borrow your calculations from round one if you would like. If you think it makes sense for you to update those with 2020 numbers, you can use 2020 numbers as well. The same rule applies. You had to have been in business before the pandemic started February 15th, 2020 or earlier in order to be eligible. There is a special calculation for seasonal businesses, much like before. So average monthly payroll might not mean a lot for a seasonal business. So there's a special calculation allowance for seasonal companies. Self-employed individuals are eligible. They'll be able to apply at the same time. But I would caution you that if you're at a point where your business is still closed down and you're self-employed, compare that to unemployment. Unemployment now has a $300 weekly addition. So unemployment might be a better deal. In most cases, probably not, but worth checking into. Okay, next slide. So a normal SBA requirement that if businesses who are in bankruptcy proceedings, they're not eligible for it. The loan amount we already talked about, 10 million for the first round. Second draw is capped at a lower amount, 2 million. Borrowers can only receive one first draw loan. So in other words, the qualifiers for the second round are more narrow. It could be you qualified for the first round, but you don't qualify for the second round. Again, you have to show that you had a loss. You have to have fewer than 300 employees or 300 or fewer employees. And the total loan amount is limited as well. The covered forgiveness period up to 24 weeks. That's a huge improvement over before. And so you're going to have a lot of flexibility in deploying it. Before in round one, you were kind of under the gun. You just had to spend the money really quickly, get up to full employment, and spend the money in a short period of time. That is not the case with round two. So Congress clearly heard and improved upon the program based on that. If you have an LLC with multiple members, the partners can't apply separately. The LLC can just apply for one. So if you're in that situation where you have multiple partners, maybe several, in a professional like attorneys or CPAs or something, multiple partners in an LLC, the LLC is under one, needs to be under one application. Okay, next slide. And that's it for that. For that proposal. So I'm happy to take questions, but we went through it pretty quickly there. But ultimately, this is just as a wrap-up comment. A lot of the criticisms that were made about the first round, that it didn't get to enough small businesses, that it allowed for too much abuse or too many resources taken by larger companies, that it was too limiting on what you could spend the money on, and the timeframes were too short that you could spend it and still qualify forgiveness, and that getting the forgiveness was too complicated. Those have been largely addressed in the second round. And I think that there's been some major improvements. It's still not perfect. But perfect can't be the enemy of the good. And in this case, I think they really did a good job of listening and responding to what the need is. And I expect that the $284 billion that has been made available for this process, it's going to go a lot further because of these controls and restrictions that were placed on it as compared to that very first letting of round one in 2020.
Thank you, Brian. I totally agree. I couldn't agree with you more. Right now, regardless of your political ilk, all of us are fixated on what's happening in our nation. And there's great division on just about every subject. But what I have to say is, in watching the way the Paycheck Protection Program has been administered, our government worked here. Number one, when I think about those early days of the pandemic and how immediately we got a tool into the hands of people, it was very fast and it was far from perfect. And we learned a lot of lessons. But I have to say, people like those that are sitting on this panel today advocated, and Congress listened. And because of that, there were improvements made in the second round of the CARES Act last year. And I see even greater improvements this year. I'm excited about the IRS guidance moving from 8 weeks to 24. I think, quite frankly, in early 2020, we all thought in 8 weeks, COVID would be over. So that seemed like wise guidance at the time, but those things have actually shifted. So thank you for that overview. I want to pose my first question to Jerry. So as Brian was speaking, you're thinking, well, this really applies to businesses that have hundreds of employees, but what if I'm a sole proprietor? What guidance, what insight do you have to share with those on the call that are independent contractors, perhaps even sole proprietors?
Yep, thank you, Michelle. Thanks for having us on today. Sole proprietors are still eligible for the PPP loan. And what they will be looking at is that I would encourage them all to get their 2019 tax return, and they will have what is called a Schedule C on that tax return. And that will be the starting point on what they will be able to borrow against. It will be, there is a limit, and it'll be very similar to the 2.5% of their monthly earnings. So if someone made 120 grand a year, that meant that they had 10,000 a month on average. So they would get somewhere around $25,000 for their PPP loan. So I do encourage all sole proprietors on here to really focus on that, because that money is there for them. And as Brian said, the first couple days were geared up for those that did not have round $1, which was a lot of sole proprietors.
Mm-hmm. Absolutely. And Kenneth, Jerry's comment is spot on. So many people are confused because this time, again, I believe, as Brian alluded, in an attempt to address some of the things that didn't work as well, and learning from those mistakes, there are rounds as to when the funding applications will start to be received. Can you give us a bit more insight on that versus, looking at our large banks versus CDFIs and other banks? Can you share kind of what that cadence has been since it started on January 11th?
Certainly, Michelle, thank you again for having me and really convening this esteemed panel that I'm on with Brian and Jerry. So the essence of the answer to that question is that the legislation allowed for MDIs and CDFIs as minority depository institutions and community development financial institutions. And they had a broader term to just say CFIs, community financial institutions, to actually open up for first draw individuals this past Monday and Tuesday. So you had actually 2 days that those first draw, meaning if you did not get a PPP in 2020, you had a chance to go to, let's call it the front of the line, but only through those institutions on Monday and Tuesday. The second draw, meaning that if you had a PPP in 2020 and you were still eligible for a PPP now, you could actually begin to apply on yesterday. So that started on Wednesday, and of course we moved forward. What we understand is on tomorrow, it will be opened up for banks that are $1 billion and less. So it will go beyond the terminology of CFIs to all small banks $1 billion or less. And then on Tuesday, I think all banks will be eligible to take applications moving forward. So I hate to say it, but it's a little bit of a commercial for First Independence. We're one of only a few MDIs in the state of Michigan. In fact, the only minority depository institution. So we've been open really all week to take applications and solely focus on the smaller banks. And I won't go into too much detail, but maybe I'll answer who we're really looking at during that time period a little bit later, Michelle, but thank you.
Outstanding. And this is for any of you. I believe, Brian, it's probably most appropriate for you. I know that the SBA set up some things like lender match. So some of our people are simply asking, what is it that we do to identify who these banks are? Who are the SBA lenders? And Kenneth, I'm sure you can certainly piggyback on that. But what do we do if we can't find them? And what resources are there for us to locate potential providers?
Well, there was a process during round one where more and more banks and credit unions that weren't certified SBA lenders became certified SBA lenders for this purpose, because they wanted to be able to offer Paycheck Protection Program loans. And so you saw a very wide expansion. It was bumpy and chaotic back then, but those banks and credit unions are now qualified for round two kind of automatically. And so I would recommend that you definitely start with wherever you do your regular banking first. So you to ask your existing financial institution, even if you don't have loans, but just a checking account for your business, to start there. And because you already have an established relationship, there's some steps that will be faster that way because you're an existing customer. But if it turns out that you're at a financial institution that does not participate with the SBA, I think I'm a big fan of word of mouth. I mean, but there are literally thousands of institutions out there now that are. So your friends and colleagues and where they bank makes a lot of sense. And I'm also a big fan of community banks. So the smaller banks that you're not just a number, you're a person, and they know you. And so your local community bank, your local credit union, very, very high probability that they participate.
Outstanding. Kenneth, any guidance that you would have for people? You did your shameless commercial. I totally, no fault there, but any additional guidance that you would have for people? Because I do know that was a concern from many of our smaller businesses before.
Yes, this is a great time, and I used to say it back in the spring. It's a great time to get to know your banker, as Brian just talked about, because those relationships mattered in the crisis last year when we were going through this in April. In fact, we took up to over 40% of individuals who we knew, but they were not actually customers of ours because they didn't get the service that they needed because they were part of a bigger process and it just had not funneled down to them. So I would say, again, to those of you who are out there in the listening audience, do not be intimidated by this process. Feel free to ask questions and to figure out, as you've got professionals on here now, who will be willing to help you kind of identify the issues that you need to resolve so you can apply. And I'll end with this comment, and it goes back to what Brian just said. Of all the applications that came into us, there were some that didn't get to the point of submitting them. But I want to give a plug to the SBA for every single one, to my knowledge, that we submitted, meaning we had all of the appropriate information. They were all approved. So this is not a question of do you qualify or will you not qualify from our perspective. It was a matter of, do you have really the documentation that supplements the ask that you need based on the guidelines to receive the funds. So I would encourage anyone who, again, did not participate in the last one to figure out what those guidelines are. They have made this form a little bit slimmer, for lack of a better term. And so figure out if you can apply, because if you do not, those dollars will not be used. And that's money that will not come into our economy here in Michigan.
Absolutely. So Jerry, as people are looking at that, because I do think they've simplified the format, but we get a lot of questions. On the one hand, everyone's excited that they've now opened up 2019 or 2020 to be able to look and compare the quarters. But what advice do you have for people on how to go about that process if they don't have a large accounting firm assisting them?
Yep, that is a great question, because we get that asked all the time, and I'm sure Kenneth is seeing it just as well in his bank. We've been recommending to all the small businesses that we work with that they first take a look at their 2019 revenue by quarter and compare it to their 2020 revenue by quarter. Just quickly do that calculation on a spreadsheet, because they're going to need that when they do their documentation to the bank. If any one of those quarters is under 25%, that does not mean you don't qualify. If the entire year to date is at 25%, you will qualify. So that's why we're recommending that everyone does that as quickly as possible, because that will get them to where they need to be. In addition, we are also, if you were in round one, the application process has been really slimmed down, as everyone has already said. Most banks will take what you've already given them for 2019 for payroll and basically use that for their 2.5 times if you're not in the accommodation and restaurant hotel business, and they'll use that 2.5 time. So you only have that revenue spreadsheet that you've just put together, and then you have the application that just gets sent in through their portal, and it should be a pretty seamless process for you. We are, however, because there are businesses that did grow in the third and fourth quarter of this year who are still 25% under, they are looking at their 2020 wages, grabbing their 2020 wages per month, and then multiplying that times 2.5, because, you know, $1,000 here, 10,000 here, it's a big difference right now for the economy. And so we are suggesting you do look at a comparison between your 2019 payroll monthly average and your 2020 monthly average, and choose one of the two that's most advantageous to you. That will, however, increase the documentation that you are going to have to put to the bank, because now you do have to pull all your payroll reports down for 2020. So that's what we've been telling a lot of businesses to quickly do, that is, you know, and make it as easy for yourself by use of spreadsheets, because the banks will love having that data very quickly.
Yeah, very good. So one of the things that you said, and I think we get this question often, if I had a loss for 2019 or 2020, do I still qualify?
When you say loss, Michelle, are you talking about a net loss, or are you talking about gross receipts?
I think our people are talking about their gross receipts. If I'm really looking at the fact that my business has struggled, is this program really designed for me?
Yes, if those gross receipts are down 25%, so if you were $100,000 in gross receipts for 2019 and you're 75,000 for 2020, you're going to qualify. That's the key. But if you had only one quarter that was down for 25% and the other 3 quarters were up 30 or 40%, you're still going to qualify. So I think it's important. That's why you have to look at it both ways. And gross receipts does not include any money that came in from the PPP in round 1. It only is your typical revenue, your interest, your dividends, your typical gross receipts that you normally saw.
That's great.
Michelle, let me supplement one thing on that though, Michelle. There's a scenario where you have a sole proprietor who has a net loss for 2019 and 2020. That's the case where the Paycheck Protection Program, the way that the loan amount that you can get in the first place, if you have a net loss for the whole year, then the amount that you can get is 2.5 times a negative number, which is 0.
Right.
So that I just wanted to make sure that in the case where the entire operation has a net loss and no payroll, it's just a sole proprietor with a Schedule C on your tax return, then that's the case where Paycheck Protection Program, the way it's designed, is just not going to help you.
And Brian brings up a great point, because that also held true to the LLCs that had partners that may have lost money and didn't have payroll. So that was, Brian, thank you for bringing that up, because that is a great point.
So along those lines, though, another question that I recall hearing often was how you calculate. So if you do have partners and officers in organizations, there are some limitations on how much of those salaries you can include, but some of that was addressed in 2021, was it not?
Yes, they were. They do take the 2.5%. You were limited to $100,000 in your forgiveness application, but you still were able to take 2.5 times the total salary that they were paying. So what we did see a lot of sub S organizations during 2020 change the way they paid their members, because in a sub S organization, they were not taking necessarily full payroll as an owner or an officer of the company. So a lot of them did increase it for 2020, just in case round 2 came out. In an LLC, there wasn't that big of an issue, because in an LLC, as Brian and I both stated, the LLC, it was based on the individual's K1 earning. So there's a lot of intricacies in there that they have to work through.
Right. So one of the things that you also said, Brian, this brings up a question for you, Brian. is one of the other things that I think I saw that was quite exciting in this round of funding when I look at the advice was looking at industries. So there was great emphasis on understanding the industries that had been most impacted. Can you shed a bit more light on those industries? But also, I know that there are even some farm credit institutions, Kenneth, that you might want to tack on at the end that were given consideration because we realized some of those industries have been harder hit.
So what they did different in round two was to say your multiplier, instead of being 2.5 times your average monthly payroll, if you're in the restaurant or hospitality industry, and they do it by NAICS code and AICS codes, and your bank can tell you which one you're in. But if you're like have a restaurant or a hotel, you're going to be able to get 3.5 times the total amount. And I think this is just a direct recognition that those are the businesses that are most restricted in terms of how they can operate. Certainly here in Michigan are still under restrictions in indoor dining and in gatherings and the sorts of things that happen at oftentimes at hotels that have convention centers. So those entities, as long as they're small, can qualify for a higher amount. Now the requirements on their spending are the same. So it's be 60% for payroll and the amount of time they have to spend it, that remains the same, but those industries can get a higher amount.
Excellent. Outstanding. And Kenneth, do you have anything to add? I know that when I looked at some of the SBA guidance from Treasury, I was looking at some of that and saw that one of the areas that they looked at were those farm credit institutions as well. So
yes, it's seasonal along the lines is what Brian just stated. That's the NAICS 72 regarding kind of the food space. There were some other carve outs associated with seasonal workers, individuals who may be involved in, say, farms and planting and the harvesting of crops. And so all of those had some very unique, I call them carve outs for lack of a better term. I know we have all of those listed and those guidelines are listed on our website. So if you're in that space and have an interest in learning about, the particulars associated with that, I know we have that on our website.
As I listen to you, I think about the people that are trying to make the decision. As Brian described this at the top of our call, does it make more sense for me to simply apply for the loan and secure the loan and not worry about forgiveness, treating it as a grant, but literally just maintain it as a loan at a low interest rate? Any insight there that any of you can offer?
I'm gonna let these gentlemen lean into that one first, being a banker, and then I'll come behind. Okay. Jerry Lee, and you look like you're happy to answer this question.
It is a question that has been thrown at us in the last 2 weeks, Michelle. And the reason is there's one area that we didn't talk about here was what was called the employee retention credit. And because of this employee retention credit that now comes into play, there's a mathematical equation, and I'm not a mathematician, but there is a mathematical equation that it could be potentially better to take the entire ERC, the employee retention credit, and then pay off the loan over a long period of time, over a 5-year period at an extremely low rate of interest rate. It's not the simple answer that I think people would like to hear, but I do have a few clients where we've done a quick analysis, and when you look at the time value of money, it makes sense to take that ERC and then use the 5 years to just pay it back, because we're able to keep that cash flow going is what we're looking at. Right. Brian, I don't know if you had any other opinion of that matter, but it really opened this discussion up.
Yeah, the employee retention credit was actually that same question existed last year too, but the difference now is that the employee retention credit is so much more generous than before. So the calculation on what's the best route to go is different, because you can't get a Paycheck Protection Program loan forgiven and get the employee right. retention credit. It's one or the other. So that is something that it's very situation specific. And having your whoever does your taxes, having your CPA look at your situation and can just compare. Now, absent the employee retention credit scenario, though, because not everybody will be able to qualify or get that, then the question comes: do you want to use the money as required and still get forgiveness, or just take it as a low interest loan? They've put enough flexibility into round 2 that frankly, it's difficult for me to think of a scenario where not spending the money according to the forgiveness standards wouldn't make the most sense. There probably are some scenarios out there, but before, when they said you got a really short window and you got to spend all the money now, and people weren't even allowed to open yet, and they said, I'd rather hold on to the money and use it to reopen later on when I'm allowed, that was one thing. With round 2, you have a lot more time to spend the money and still get 100% forgiveness. So I kind of feel like almost every scenario is going to make sense to use it in a way that allows the amount to get forgiven.
Yep.
Excellent. I know you like to hear that, Kenneth.
Absolutely. Well, I'll lean into this. It's one of those that, Brian kind of summed it up. Let's kind of adhere to the integrity of the system and what it was intended to do. Let's do that. And I hear a Jerry aspect, which is really, when you look at it, there's a value proposition here on the time value of money. And for some, there may be a way that they could work that out in such a way that they're getting a quote low interest loan for a longer period of time. And so, those are both legitimate concerns, and to think about those and how they work best for you and your business.
Outstanding. Thank you, gentlemen. You handled that one beautifully. The forgiveness aspect, though, you mentioned that, so I want to touch on that, because I know we have some people that still haven't applied for forgiveness from their 2020 loans. And Brian, you mentioned a bit in your opening talking about the EIDL loans and how in 2021 they've certainly adjusted that. Is it retroactive? So if you received an EIDL loan in the 2020 CARES Act, can you explain the difference in how that is treated versus 2021? And how do you apply for the forgiveness for the EIDL loan? Is it the same as your PPP forgiveness application?
So let's talk about this in kind of 3 different buckets. So you get EIDL loans, the economic injury disaster loans. Those are just loans, and those do not get forgiven. Low interest loans, you can get them for long, up to 30 years, advantageous terms, but those are loans, they don't get forgiven. Then they added something in addition, and this is where it got confusing, as they named it the same thing. They called it the EIDL advance, the EIDL loan advance. They said, while you're waiting for your EIDL loan, we'll just give you $10,000, or up to $10,000, I should say. It was $1,000 per employee, up to $10,000. So that's just a grant. So that's separate. That there's no forgiveness. You get it. It's just a grant, and you don't have to pay it back. That was from last year. Well, then when people got the $10,000 grant, and they got the Paycheck Protection Program loan, what they found out was that when the forgiveness came in for the Paycheck Protection Program, they deducted the $10,000 for the EIDL grant, because they said you can't get both for free. In this new CARES Act, this new Stimulus Act that enhances or changes some things from the CARES Act before, what they said is, no, the EIDL advance you got last year does not get deducted from your Paycheck Protection Program forgiveness. So now that is going to create, and I don't know that perhaps Ken will know, I'm not sure if they've even put out the rules on this yet, but I believe that the bank will then have to go back and resubmit and say, for the last $10,000, hey, last time SBA, you deducted $10,000. This has been changed in law. Send the other $10,000 for loan forgiveness. So I think that's how it's going to happen, but I hadn't seen the rules on how that retroactive change will be effectuated in real time.
Yeah, Brian, you're exactly right. And another of the caveats there, in addition to what you described, is that there were some people who applied for a PPP loan, got it, and then they got an EIDL behind it. And at the end of the day, when they went for forgiveness, that gap was there. The banking industry kind of lobbied pretty hard to try to get that cleaned up, because that was really not the intent, to short those individuals in that manner, or to short banks in that manner, to getting those things forgiven. So we are hopeful that that's going to be retroactive, as you just stated.
Outstanding. And then along the lines of forgiveness, probably you, Kenneth, and Jerry, just in terms of forgiveness, if I haven't applied for my 2020 forgiveness, what steps should I take?
We would encourage you to go ahead and apply, which suggests the funds have been used for the intended purpose in the midst of applying for this round, but it's not required.
Yeah, I think, and I think Kenneth is correct, because you do have 10 months, as Brian had talked about. You have 10 months from that last portion of the period that you use the loan. For most firms that we've seen, and clients and businesses, most of them are using the 24-week period, Michelle. So they're going to have pretty much almost all the way till, July and August of this year to do it. But we've been encouraging people to start getting all their data together. We've created a spreadsheet that pretty much tracks everything for our clients, their payroll, their health insurance. But then you look at the other items now that have been brought into the picture, some of the new operating expenses that they've added, such as computer software costs that you might be paying, that you have to have in order to run your office. If you were, unfortunately, your business got damaged during one of the protests or one of the rallies or whatever we want to call that, those costs can be put in addition to costs that are also part of the getting your PPE expenses and getting your offices set so people could work in them on your manufacturing. So we're encouraging people to get all those costs laid out on and during that 24-week period, so that when you pull all that together, you can make sure that, again, you're maximizing that forgiveness, because what a lot of businesses did not understand is you first look at your total cost dollar, making sure that your payroll is greater than 60% of that total cost dollar. Then it looks at your FTE number for who was working during that period compared to what your base measurement period was. So as Brian stated earlier, the odds of getting 100% forgiveness have been greatly increased because of that.
Right. No, it's truly been designed to assist small businesses. I'm going to start looking at some of the live questions here, gentlemen. So we'll jump around and just answer if you have advice to share with our audience. The first one here is, as an LLC, we must establish a filing for the IRS. We are an S corporation. Does that by itself ensure that we are eligible for a second draw?
Whether you're an LLC or an S corp, they're still going to get a second draw at that point if they had a first draw. Again, what they have to look at is what their payroll was in that point. That's a very open question, Michelle, because it's based on the payroll dollars that S corp was paying. And as long as their gross receipts went down by that 25%, and they had a round one, they're going to qualify. If they didn't have a round one, they're going to qualify for the round one, but it's going to be only based on the payroll dollars that they were paying.
Got it. This next question, I received the first PPP in the amount greater than 50,000 and less than 150,000. The bank has a forgiveness application form for borrowers with above 150,000, but they don't yet have that application, the simplified application for forgiveness for those that I fall in. Should you still file the loan forgiveness application that's currently out there, or should you wait for the simplified version?
Well, here, different banks are handling this different. So there are many banks that have said, wait, we know something a lot easier is coming for 150,000. So if your loan is smaller, please be patient. Don't make us go through the more complicated forgiveness application when we think it's going to be basically automatic or much more simplified. Other banks are saying, you know what? I know this is weighing heavily on the minds of business owners. Is it going to get forgiven? You don't really believe it until it actually happens. So we're not going to make them wait any longer. So that individual banks and credit unions have made different judgments in terms of how quickly they get into the forgiveness business. But I think at this point, most are. I mean, most are handling forgiveness applications across the board for everybody. So I would say it's probably becoming the exception to the rule, to where round one forgiveness applications are not being processed, regardless of size.
Right, exactly.
Yeah, that sums it up, Brian. You're exactly right. And the lobbying on the whole attestation below the 150,000 mark, which had probably been discussed since the summer, was one people were, pretty comfortable was going to happen. And so we've kind of gotten there, but you're spot on.
So gentlemen, this is a question I actually don't know the answer. Sometimes I'm asking you questions and I know what you're going to say, but this is one that I don't. I do recall that there was a 10-month period in there at one point in some of the guidance where you had to apply for forgiveness in 10 months. Is that still accurate? 10 months of the time that you received the loan?
It's 10 months from the day of your last usage on your application. So
Gotcha.
if you were an 8-week period, it would have been 10 months from that 8 weeks, or 10 months from the 24 weeks. Now that they allow you to put in an application anywhere between 8 weeks and 24 weeks, it's going to be that, I like to call it the measurement period, Michelle. It helps me keep my goals focused. So I'm looking at, or the covered period, sorry. So I look at the covered period, and it's that last day of your covered period. It's 10 months from that day.
Wow. Outstanding. Excellent. So that should help some of you that are still trying to decide when to apply for forgiveness. This question is really about the application itself. Where is the paper application for this round? Is there a paper application to submit to my lending institution?
Well, there is a form that you can print out, although most institutions have digitized it, and they would prefer that you apply online. So you fill it out and submit your information remotely, given the pandemic type procedures. That's how most of them are operating. However, most banks and credit unions now do have, by appointment at least, where if you needed help filling out the application, you could do so, but it is a standard application everywhere. So it's the SBA, the Small Business Administration of the United States government. They made the application. So the contents of the application, no matter where you go, are going to be the same. So, printing it out and going over at sba.gov and going over all the information that you need for that application, it's pretty short too. It's, it's compared to, like, if you ever did a home mortgage or something, it's a modest application. But it's standardized but I think that most are going to expect that you do submit it electronically. I don't know, Ken, if you have some.
We are. In fact, ours is up on our site at firstindependence.com, and it's all electronic now, which will allow us to have a higher volume of throughput, making it more technology savvy than trying to do all of it by hand, by paperwork. So to your point, Brian, quite a few institutions are probably moving in that direction so they can take care of more customers.
Kenneth, along that line, is it if someone received their first PPP loan from a certain lender, should they automatically go back to the same lender?
They don't have to, but I would say the familiarity, if they were successful there, is probably a little bit of a plus. But you can go to another lender for a second PPP loan. But what you cannot do is go to that second lender for forgiveness on the first one. So you'd have to do the forgiveness with the entity that you did the loan with, but you can do your second draw with a different institution.
Okay, excellent. And this is another kind of banking question. This person is describing a scenario where they have a business account with a large lender, but during the PPP first round, the bank never really followed up with them, and they had to go to a small local bank to get approval. Fortunately, they got the first round. Now they're going back and looking for that second draw, and the lender is telling them that they have to have an account with them. Is this allowed in the Paycheck Protection Program with the SBA?
It is, and so it was a little bit of the premise of what was not expressed in what they said by the larger banks, right? So this was a volume and capacity issue across the system. And this is not to say anything negative about big banks or even small banks, but if you were not you didn't have a loan with the larger banks, they were focused on those that had loans in the first upper part of the round one. What you found is that smaller banks were willing to kind of lend to them based on relationships, even if they didn't have a bank account with them, just because I knew them in the community. And what that led to is this, propensity of these smaller community banks really over delivering in the PPP round one. And they really stood up. I mean, they loaned more money on a per pound or per equity basis than the larger banks. And that's just kind of a fact. But what has happened now is that quite a few of those banks, if they didn't put those dollars in their facility, they still have a little bit of that obligation on their balance sheet. And some are probably to the point of where they're saying, I can't take on a whole lot more risk for someone who's not my customer. I'd much rather be in a position to serve my customers first. And so that's a little bit of what's at play here. Goes back to my comment earlier, get to know your banker, which means also get to build a relationship with your banker, even if it's a small one and a large one, probably is a very good strategy going forward, because I don't surmise that this will be the last opportunity to see some form of assistance. There may be more. And so I think if you have, being a prudent business person, I would suggest you to have a relationship with a community bank and even a large bank if that's what's needed for you.
Absolutely. Certainly diversify. Brian, I think this next one is for you. They mentioned that there are many exclusions that they noticed in the legislation in terms of those that I know some that are always there is if you have a spouse that's a member of Congress and you're running a business, those types of things. But this one in particular is asking, are registered federal lobbyists excluded again? So if you can expound on some of those exclusions.
Well, the one of the main differences is that they allow organizations that are 501c6 organizations to apply. So there was never an exclusion against a profession like lobbying. So like a small business that was a lobbying firm, they would qualify like any other small business. But there are some associations, 501c6 associations that exist in part to do lobbying. They were not included in the first round. In the second round, they said under certain circumstances, if they are small and if they primarily don't do lobbying, in other words, it might be do some, but it's a small percentage of what they do, they could qualify just like a 501c3 can qualify. So they open the door a little bit into organizations that do lobbying under 501c6 status. But I think mostly though, that 501c6 is going to be like your local chamber of commerce. They don't really do a lot of lobbying. They might do a little bit, but those kinds of organizations, I think, are the ones that the door got open to here. But the profession of lobbying itself was never precluded. Given if there was a private sector firm that did lobbying or a law firm, for example, a lot of law firms do lobbying, they were able to apply the first time too.
Excellent. What if you were declined in 2020? When you looked at the CARES Act, you were declined for some reason. Should you even bother to look at it in 2021?
I would say yes, and I think I talked about this in my earlier comments. We didn't find anyone that we submitted to the SBA being declined. Those who may not have gotten to the point of having theirs submitted may have been because of a lack of verification of the right paperwork and following in the guidelines. And so, if you were told no, I would ask you to go back to your institution and find out why. Because the program is a program, and the intent, and if you're meeting those guidelines, you should be accepted. The SBA this time is changing the rules a little bit. They were giving pretty much immediate approval based upon kind of that real quick first pass. This time they're actually requiring more verification on the front end, but it may take a little bit longer to get the application kind of accepted. My point is, in the past, the first round, if we would press the button, it would be accepted probably within that day. because it had all the required material. This time we anticipate that it may be a couple of days because there's a little bit more verification to deal with on the SBA side at this point. But my point to answer your question, Michelle, is that yes, you absolutely should apply.
Absolutely. No, it's certainly been designed to assist and to try to remove the barriers to assisting, I believe. I typically wouldn't do this, but we have like 4 questions here where they're asking us to clarify the EIDL loan. So you piqued a lot of curiosity with your example. And I'll read a couple of them to you, Brian. For the $10,000 advance grant, where can I apply for this? Hadn't heard of it before. Can I still apply through the small business website?
Well, yeah, great question. So I was talking about EIDL advances made in 2020 and the impact that it had on your forgiveness. They did put in this new stimulus package that passed late last year, another, I think it was $20 billion for EIDL advances. What was not clear to me, and I still don't know the answer to this, is that for new advances or is that to pay for the forgiveness on the old advances? I don't know that for sure.
Yeah.
So what I was describing before was the impact on the ones that already happened. Are they going to be opened up for new EIDL advances for brand new applications in 2021? I don't know.
Excellent. No, appreciate that. The other follow-up question regarding EIDL is asking us to explain again the difference between the EIDL loan and the EIDL advance, because this person was shocked when they weren't forgiven for that part of their PPP. They weren't aware of that. So what's the difference between the loan itself and the advance, just again for the audience?
Well, if you got the EIDL loan, which is not going to be forgiven, it's just a loan, you would have signed loan documents, you'd had a loan closing for it. The EIDL advance, you would have filled out a form online, and then it could have been 6 months later. You just got surprised with a deposit in your checking account. You never filled out any paper. You never had to sign a loan document, nothing. It's just like, where'd this come from? We had so many of our members reach out and say, they forgot they even filled out the EIDL advance paperwork because it was so many months. And then just money has showed up in their checking account because that was part of the form they filled out, was how to get money to them. And I should say too, Michelle, because sometimes it's not intuitively clear. I work for the Small Business Association of Michigan, a private sector association of 29,000 small businesses in Michigan. But that is not the same as the Small Business Administration of the United States government, which is that's the US federal government. They do the loans, the advances, they have billions of dollars. I wish we had billions of dollars for the things we do with our members. We do not. But anyway, that was a point of major confusion last year. But if you got the loan that you just you have to make payments on it, it probably could have been for 10 or 20 or 30 years, depending on whatever terms that you came to. But if you just had a surprise deposit into your checking account one day, because some point months earlier you filled out an online application at sba.gov, that's just the advance. You do not have to pay that back.
Outstanding. Are sole proprietors able to apply for the PPP as well as the EIDL loan with the economic aid disaster or relief fund that's currently available with the new act?
You can definitely apply for the Paycheck Protection Program. Last year, you could have applied for the EIDL advance, but you'd have gotten $1,000 would be the max because it's $1,000 per employee, including the owner. So I do know of some companies that had fewer than, in the very, very beginning, they were just giving $10,000 out to everybody. And so some really small companies that have fewer than 10 employees got 10,000. But then they tightened it up after that. So the vast majority, if you would have applied for it last year, you could have gotten $1,000. Whether or not that gets open again, I don't know if it's going to be reopened this year or not.
Okay, good. You just answered the next question. Jerry, I see that you wanted to perk up on that response.
I wanted to just focus on Brian's response a little bit more, only because the EIDL loan is still available for those people to apply to. So I think that's important because I've seen a lot of questions on here about, can I still get an EIDL loan? How does that work? That EIDL loan is still out there because a lot of people applied for them and then ended up not taking them. So the money went back in and it's still there, if I'm correct, Brian. And that loan is, and that's the important, that loan is different than the advance. And a lot of our small businesses that were Schedule C organizations, that EIDL, or what we call the idle loan, got them through the last 5-6 months. Because it is, again, a very low interest rate, 30-year term loan. And I would encourage everyone on there that they still look at that as well until we figure out if we get another advance. Because I was with Brian, the 20 billion's there. We have no clue where it's going. We just know it's there right now.
Yeah. Yeah, it's a good point. So I was talking about the free money, the advance.
Yeah.
Gary's talking about the loan. That's not free money. It's cheap money, but it's not free money. You do have to pay it back.
Right.
That's still open.
With the true closing.
Yep.
So shifting gears a bit, we have a question here about the travel industry. This is a full service travel agency providing bookings for air, hotel, resorts, etc. Do they fit into the accommodations and food exceptions that you mentioned, Brian, in your opinion?
I don't know the NAICS codes well enough to just answer that off the top of my head.
Look for the NAICS codes.
Yeah, look for the next code. And if their next code starts with 72, they qualify. And this is a question I've had quite a bit. And I haven't been able to find that the entity servicing that industry will qualify. But if travel agency is literally set up as a 72, and I'm going to look right now, if it's set up as a 72, then they're going to be okay.
Okay. Excellent. Well, thank you for that. And I say to our audience, this is just an outstanding panel, a wealth of knowledge. But one of the things that I learned with the first CARES Act last year was there was so much. I think I expected that when they issued this guidance, it was all going to be clear. And then I learned that no, there are many follow-ups. And at the end of the day, I do have to say, I believe everyone is working on behalf of the small businesses of this nation to ensure that we are able to go in and get clarification where it's necessary. I saw many people testifying with not only Treasury, but the small, I know Kenneth, you've testified before as well, really trying to bring clarity and ensuring that they were representing and advocating on behalf of small businesses. So stay tuned on some of these where they're telling you there's really no clear guidance at this point. Kenneth, this is a question I believe you answered earlier, but I think the person is asking for clarification. If they are banking with a larger bank, the application process opens for those banks on Tuesday, January 19th, correct?
That's correct.
Okay. The next question, Jerry, this is one for you. It looks like a small SBE, independent contractor, LLC or S Corp with one employee won't benefit from PPP if they have very low net income on Schedule C. If they have a loss, then it won't apply. There's no benefit at all. Can you think of any alternative programs other than bank loans or SBA traditional loans for MBEs who want to hire employees and grow or introduce new products and services? And actually that, Brian, you can certainly weigh in from your work.
I was going to say my first comment would be the EIDL loan is really the first one, but then there are a lot of the grant programs that came through that Brian probably has a lot more info than I do, that we're seeing some grants starting to pop up and some money that's going to be allocated through the state of Michigan and a couple other areas. So Brian, if you could expand on that a little bit.
Yeah, so the grants that have been made available so far, and there's a new one, actually it was just approved a few minutes ago by the Michigan Strategic Funds called Small Business Survival Grants. There'll be about $55 million of those, up to $20,000 per, targeted toward the industries that were most impacted. So it'll be more of a previous grants were first come, first serve. This will be more based on need-based. But, that's different than, hey, I want to grow my business from here. I want to grow my business as traditional SBA lending type programming. Most of the grants are meant for, hey, I'm negatively impacted by the pandemic and through no fault of my own. And so there are some grants. Now, 55 million might sound like a lot, but statewide it's not very much. It's almost like winning the lottery to get one of these grants, unfortunately. And it's not to say that I don't appreciate how far they've gone. The state and the strategic fund, MEDC, and some local economic development corporations and counties have gone to make grants available for businesses. But just to be blunt about it, the need is so great compared to the amount that any state or local jurisdiction has in their budget to apply. So in this case, 55 million it's quite a bit, but at $20,000 per, you talk about 3,000 to 4,000 businesses that could possibly qualify, and there's over 100,000 businesses in Michigan.
Right.
Michelle, if I could just answer one question real quick.
Please do.
Yeah, I was going to say, a travel agency, unfortunately, will not qualify for round 2 because they were a code 56, not a 72.
72. Thank you for looking that
Yep.
up, Harry. Thank you. In terms of really looking at funding, I have to say to the person that asked that question, we have started seeing corporations even come to the forefront. So again, as Brian said, sometimes it looks like you're trying to win the lottery with these, but I was on a call yesterday with Siemens, who has facilities here, of course, in Michigan, and they are looking to support, in particular, minority businesses. So please do stay tuned to the minoritysupplier.org website, because whether they're public funds or from private sources, like some of these corporations that are creating funds, we are doing our best as a team to put that into your hands so that you can apply. Even some of our counties have even come forward with funds that are helping businesses. So we'll continue to do that. Moving back to Kenneth, here's a question for you. I know you're going to enjoy. Can we apply to several lenders at the same time? Is there any reason we shouldn't apply to multiple lenders at the same time?
I would encourage you not to. I think the sophistication at this point, where many individuals are using systems that can submit this information through a client-based service, is pretty quick now. The previous generation, what we did back in the spring and summer, was really off old technology. It was AS400 technology. So, you had to go through the bank and go through all of its systems and then get it submitted to SBA. That was a slower process. I think now you're going to see a lot faster batching. And so I would encourage you not to try to apply, because it creates work inside of these institutions and bogs it down. Your bank may get a notice that you've applied, and it just creates confusion. So I would try to get an answer from your institution as fast as you can. And then if you can't get the answer, then I would move on. But I wouldn't do a parallel processing just to see who gets it across the finish line first. And let me cap this off. There should be, based on my conversations with the SBA, plenty of funds to go around the pool that they have identified that would qualify this time. So there shouldn't be the mad rush that we faced with the initial rounds back in early April of last year.
Mm-hmm.
Yeah, and if I could put a finer point on that too, what may end up happening is, that everybody's applying, every bank is sending your information through the same portal. So what'll happen is, whoever's first will get that approval back, and then the other ones will get denials because you've already been approved somewhere else. And what I would be worried about is that somehow in the system trying to flag for fraud and for people, doubling up and getting too much, you might find yourself in a situation where all denials come back because you're trying to put multiple applications in and you're only eligible to apply to receive it once. So while before people were doing that because they couldn't get through, it was a big log jam and where could I go? In this round, I would really encourage you to steer away, go with somebody who takes your call and answers your questions and provides good customer service, and let them work it through the process.
Right. Certainly an improvement from the last time, because I know a lot of our minority businesses had to do that before. Even though they had great relationships with their bank, they believed they were just not, in terms of prioritization, they just weren't there. So they had to go find other solutions. So a great improvement. We've got about 10 minutes and I want to try to get these final questions. So I'm going to do a rapid fire with tax questions, Jerry.
Okay.
What is the tax treatment of the PPP for an LLC?
The forgiveness of the dollars amount has no impact, and you're able to deduct all the expenses you paid with that money. So it ends up being a positive for you.
Excellent. You answered this before, but I think they're asking for clarification. PPP 1, the loan amount is not taxable as income, while the expenses like payroll are deductible. Can you please clarify?
Yes, yep, they are absolutely correct. They did on this act on December 27th, they again have allowed all expenses paid with PPP money to be deductible, and the forgiveness of that loan will not be income. So it was actually, the intent of what the law was in the beginning was put in place at the end of December. So they will get those expenses.
My final tax question from the live audience: can an owner that receives a distribution, you discussed this before as well, be included in the payroll calculations this time?
Not if it's a distribution from a sub S, no. If it was a distribution from an LLC, again, they will look to the K-1 to see what that net income was.
Outstanding. And then this question, again, I think we've covered it a bit, but I want to revisit it because I think a lot of people have the question: if I did not apply for the round 1 PPP, should I apply for round 1 or round 2? I think they're talking about the second draw. Should I go in and apply for the economic aid rounds at this point? Am I in the first group that Kenneth spoke about, or am I in the second group? Which application should this person complete?
They should be doing round 1. If they have not taken a round 1, and Kenneth, you probably would want to explain that a little bit more so they get a good feel from your standpoint.
Yeah, certainly. So it's called first draw, meaning that this is the first time that you will receive, let me use that term, receive, not apply, receive PPP funds. So if you receive them before, you fit into the category of second draw, that's SD, and you'll see that actually on the form. But if you've never received, you didn't receive any in 2020, regardless of whether you applied or not, you would be considered a first draw.
Gentlemen, you have literally answered about 40 live questions, so I'm impressed and very grateful that you took the time today to share your wisdom with these business owners. They are the backbone of our economy. And Brian and I are excited every day that we get to advocate on their behalf. But without professionals like you, Kenneth and Jerry, we would not be able to support them and do all the great work that we do. So thank you for taking the time today. I'd like to give each of you an opportunity, if you would like to close out today, and simply share your final nuggets of wisdom, and then I'll close the session. So Brian, would you like to start?
I just want to encourage people to remain vigilant as part of the advocacy network for small business. Now, there are many small businesses out there that are not really restricted in any significant way and moving on, but in going about your business, don't forget about the ones who still are, though. They're struggling mightily, and so I think that we need to keep the same mindset that we had in the beginning of the pandemic, that smaller companies are such an important part of the supply chain. They're such an important part of the of our communities, the foundation of our communities, and to keep each in mind, even if you're not one of the ones that are most impacted right now, that you could be next time. And so the more that we can speak with one voice to ensure that our state, federal, and local governments are paying close attention to the needs of those who provide the real economic infrastructure on the ground in our communities, the better off we'll all be.
Outstanding. Jerry.
I want to echo what Brian says. But I also want to, make sure that everybody on the call today understands that, just because you may not have applied for round one, as we call it, the draw round one, make sure you do look at going for this dollar amount. And Keith Kenneth said it great. When you look at the dollar amounts that were distributed in the beginning, the average was around $152,000, Kenneth, if I'm reading my numbers that I have, pretty close. When you now say that the loans are all going to be under 2 million, they're all going to be under 300 employees, that base just got this big. If you were frustrated in the first round, please get in and get round one. There is the opening. It's open now for those that weren't there first. And I really do encourage you, because many businesses, that was their lifeline, and it allowed them to grow. It really did its job. So I would encourage everyone to do that. And I want to thank Brian and Kenneth for being on with me, because you guys really did provide a little bit more insight today that I wasn't thinking about. So I really appreciate hearing from both of you two as well.
Standing. Kenneth.
Certainly. Michelle, let me say thank you for your leadership and advocacy to even host this event today. I got to see you do it live and look at helping people across this country in the first round back in, April, May timeframe. So I just want to say publicly, thank you for that in helping us be successful in getting the word out. But I also want to say thank you to Brian and Jerry. I thought we really round out some of these topics and complemented very well. And we'll close by saying, this is really a team sport. And so for you who are in business and you feel like you're all along on this, feel free to reach out and see if you can seek the help you need. The reality is we need these dollars coming into our community. They are available to help support the economy. And so don't be too ashamed to ask for help, and see if we can't help impact this economy in a positive way. So thank you all so much again for having me. And thank you, Michelle.
So you now see why this group of gentlemen was our dream team to present this to you today, because we just really knew that they would have the nuggets of wisdom, even for those areas that are still not yet fully decided, where there is a bit of gray. It's not all black and white. I think you will be able to go back and listen to this recording to clarify the questions that you have. Again, what I say to you, check our minoritysupplier.org website. Each of you will receive a survey. In fact, it should already be in your inbox about today's content. One of the questions that we received was, we need more information about just how to establish stronger banking relationships. And trust me, that's one of the things Kenneth and I talked about in 2020. And I've called on each of these gentlemen throughout the pandemic for different resources. UHY literally helped us with a full webinar series, really explaining forgiveness and what that looked like and how to go about looking at your business and being able to fill out those applications and the information. Brian and the SBAM team have been there for us from day one, made that connection, and even made it a way for you as a constituent of the MMSDC to be a part of SBAM and the great work that they're doing, and will continue to do that even beyond the pandemic. It sounds good to say post-pandemic. I know we'll get there one day. And then to Kenneth, when many of you were contacting us saying, my bank has me in line, but I'm not sure I'm going to make it before they run out of funds. And it could literally mean the difference between me keeping my employees employed. Kenneth, in his role as the chair at the time of the National Bankers Association, representing minority banks throughout the country, but also right here in downtown Detroit, in his role at First Independence Bank, Kenneth was a vital support. He and his team helped push many of those applications through, and he was personally involved and wanted to be copied to make sure our constituents were cared for. So you not only have three outstanding experts and advocates on this call, but they actually care about the success of minority businesses, because they know the success of minority businesses impacts all communities. And we all want Michigan to thrive. We want this nation to thrive. Follow us on social media for additional information. I encourage many of you to look at MBDA, the resources that we offer there, and the free consultations that we're offering to businesses, helping you to pivot and to identify new sources of revenue. Some of the things that we're doing through Matchmaker 365, connecting you to opportunities that are live, are really going to make the difference as we move through 2021. So please take a look at the survey, provide your feedback. You'll continue to see us list out other design series webinars. To our esteemed panel, I cannot thank you enough. Thank you, thank you, thank you on behalf of the many businesses and the employees that you just impacted today. Everyone, take care, stay safe, and be well.
Thank you.
Thank you.